Hey everybody, today we are going to go over another type of candlestick pattern called the hammer candlestick. So one thing I want to really touch on today is one, what is a hammer candlestick and how is it really used? And two, what are the misconceptions about a hammer candle and what are things that people get wrong when they are looking for a hammer candle? So first things first, a hammer candle, just like any other candlestick pattern out there, has a statistical bias. What does that mean? It essentially means that generally a hammer is considered a bullish candlestick, just like if you have a different candlestick pattern that generally is considered a bearish candlestick. And so the statistical side of things means that, there are probabilities that a hammer candle at the right point on the chart generally is a bullish sign. Now, there is never going to be any pattern in the market or any candlestick that 100% of the time guarantees that price is either going to go up or going to go down. So that is the first thing I definitely want to touch on is just because you have something that generally is considered bullish or generally considered bearish does not mean that it's always going to be bullish or bearish. There's a lot of things that you have to take into account, and I will touch on those in this video. So first thing, what is a hammer candle? Well, a hammer candle is essentially a candlestick that has a body near the top of the range of the candle. So you can see here, if you're following my arrow, you can see here that this particular candle here is a hammer candlestick. You can see here that the body, which is essentially the bottom of the body, is where price opened, and the top of the body is where price closed. You can essentially see that the top of this candle is really kind of forming a hammer. And you can see the second part of this hammer, kind of the handle of the hammer, is the wick. So essentially, this is the range of the candle. So you can see the top of the candle is the high of the day. The bottom of the candle, the bottom of the wick, is the low of the day, in this case because we're on a daily candle. But it doesn't matter what candle time frame you're on. If you're on a 5-minute candle, it would be the high of the 5-minute candle and the low of the 5-minute candle. And notice that you have a very large wick here, but you don't have much of a wick, if at any, at the top. And so that is a big distinguishing factor of a hammer candlestick, is you essentially have what is also called an upper shadow. So barely an upper shadow at all, which is barely an upper part of the wick. So essentially, you pretty much closed near the high of the candle time frame. In this case, we're on the daily chart on the Russell 2000 micros. So you can see here that, one, you definitely want to have a wick that is at least twice the size of the body. So you want to pretty much have a very small body and a long wick, and you essentially want this body to be you want the wick to be at least twice the length of the body. Now, if you look on a chart, you're going to see a lot of different hammer candles. It's actually a relatively common candle, but one of the biggest things that you have to realize about not only a hammer candle, but also any candlestick formation that you're looking at, it needs to be at the right spot on the chart. So one, for a hammer candle, you really want to see a pretty strong move to the downside first, right? So you want to see a pretty sustained sell-off for multiple candles, and that is really the first thing you want. You don't necessarily want to look for hammer candles in the middle of a trend. Yes, you can see here you had a hammer candle technically form, but it was in the middle of the trend. Technically, you still moved to the upside after that, but you really want to find these hammer candles pretty much at the bottom of a downtrend to really have a higher probability of setting up and being a potential bullish candlestick pattern. So one, you want to see the downside move. Two, you really want to see this hammer candle bouncing off some type of support, whether that's horizontal support, whether that's a VWAP, whether that is a diagonal trend zone. You really don't want to just look at a hammer candle and just assume that because it's anywhere on the chart that it's definitely going to be a bullish candle. And even if you do have a hammer at a previous support zone, doesn't mean that it's always going to play out. So in this case, you can see here that we did have support multiple times a couple months before this candle formed, and that is a horizontal level that has proven itself to be essentially essentially a support zone that has held in the past, and you've had bounces to the upside afterward. Now, one of the things that you really want to focus on is, when does this hammer candle really invalidate? So generally, you want to have a hammer candle that has a low that has not been formed yet. So you want to essentially have the lowest low in this downtrend, and you really want to see the hammer candle green versus red. In this case, this is a white candle because these are essentially hollow candles. So you can look at a hammer and it can be technically a red candle. What does that mean? It essentially means that the hammer candle closed lower than the previous close. In this case, you can see here that we did close higher than the previous close, but we did have a lower low initially. And essentially what this hammer candle is representing is you had selling exhaustion. So you had a strong move down, buyers either stepped in and or selling just dried up and price was able to move back up. And that's essentially where this wick comes from. So you really want to have a strong move down, and then you want to see this hammer candle form, which suggests that selling pressure is starting to exhaust and buyers are starting to step in, and that's really the signature of this wick. So when would the hammer candle really invalidate? Well, you definitely don't necessarily want to see a new low form, and you definitely don't want to see a close below this wick. So generally, if you're having a new low form with a bearish candle, that is generally a sign that you're likely going to potentially invalidate that candle, and it potentially is not going to be a bearish signal, or excuse me, a bullish signal for that particular candle. So one, you definitely don't want to put in a new low. Two, you really don't want to see a close below the hammer candle's close, because really that kind of takes away the fact of what a hammer candle is. It's essentially a bottoming candle. So if you have a lower close here after this candle forms at potential support, then it's kind of taking away the hammer part of the candle. So you definitely want to have a close that is not lower. And you can see here that technically you did have this here. You had a lower close, but notice that you did not have a lower low in place. So that is the main thing you want to focus on. And sometimes you can have these patterns form for multiple candles, right? You actually had a hammer here. You had a little bit of a pullback, a slightly lower close, but the most important thing here is you definitely did not have a lower low. So the lower low, and then you can see you almost had another hammer candle form here, but there's a little bit of an upper shadow here that probably would invalidate that as truly a hammer. Even though you did have a big move up afterwards, the hammer, you really do not want to have much of an upper shadow at all. So as I mentioned, does not necessarily mean that the candle is going to invalidate if you have a close lower than the previous candle. Generally, you really want to just focus on a new low not being put in place. And so you can see, even though we had a big wick in this particular candle here, we did not have a lower low than what we had for the actual hammer candle. Now, as I mentioned, if you are looking just for any hammer candle and it's not at support, it's in the middle of a trend, it's just not that high of a probability. You really want to have a set of rules, and the rules are simple. You want to have a sustained move down after several candles. You want to have a low put in place that the hammer candle is forming, and you don't want to have a new low put in place after that. And then you really want to be at some previous support zone. If you're at just a VWAP, or you could use a moving average, but generally I'm looking for a horizontal zone, a volume weighted average price. Generally I'm using the anchored VWAP, or if you're just simply looking for maybe a diagonal trend zone. Those are all things that can really point to a higher probability of a reversal for the candle. And remember, you definitely want to have this candle being green. Just because it's not green doesn't mean that it's not a proper hammer, but you really want to see a green hammer for a higher probability of a potential reversal to the upside. And just because you have a hammer candle after a sustained move down doesn't mean you're always going to have a long-term low put in place. Sometimes you can have just a couple candles move up and you can continue down. So, the hammer candle is really suggesting a short-term bounce, and then from there you can look on different time frames and see if that bounce is something that could last longer and into more into the future more with more candles moving to the upside. Same thing here. I want to give another example. Notice here how you just have these hammers. You have quite a few hammers. You have one here, they're red, and two, they're not after sustained move down. So to me, it wouldn't really count as a high probability potential reversal to the upside, because simply you can see here that the hammer essentially is just in this range bound action. You want to see the downtrend, you want to see the hammer form, and then you do not want to see a new low put in place, and that's really how you can use hammers the best. As mentioned, one of the biggest misconceptions is a hammer is always bullish. It is not, but if you follow these rules looking for a sustained move down, a hammer forming at previous support, whether that's horizontal, diagonal, or a VWAP or something like that, that just gives a higher probability that you are going to potentially see that upside move and a short-term reversal at the least. And then from there, going into, let's say, a higher time frame like a weekly candle, then you may see more of a sustained move, just depending on what time frame you're really looking at. That will really establish what your time frame is. Is it a 2-day move up? If you have a hammer on a weekly candle, maybe it's a 1 or 2 week move up. And so really being on the time frame that you're trading on is important to understand how long that move may occur. Hopefully this video is helpful in understanding what a hammer candlestick is. If you have any questions, you can comment in the comment section below, and we hope this video was helpful in understanding a new candlestick pattern that you are now a little more familiar with.